Well, let me start by welcoming you all to another great goizueta Distinguished Speakers Series talk. Just before we get started with this particular session, I want to remind all of you that Will Hockey, who is one of our most successful BBA students, or alums now, who is a founder of Plaid, or co-founder of Plaid, is going to be visiting us in April for a second Distinguished Speaker Series event this semester. So I'd encourage you all to look out for notification of that. That'll be another great session. But today we have Allison Dukes here. Welcome, Allison. Allison is the CFO and Senior Managing Director of Invesco. In that role, she leads all global corporate finance functions, including strategy, financial planning, investor relations, accounting, corporate tax, and treasury. Allison joined Invesco in 2020. Prior to joining the firm, she was the CFO at SunTrust, which of course merged and became Truist. Before becoming CFO of SunTrust in 2018, Allison served in a series of leadership roles throughout her 20 years with the company, including head of commercial and business banking, president of the Atlanta division, co-head of private wealth management, and managing director and head of syndicated finance originations for SunTrust Robinson Humphrey. So Allison earned a BS degree in mathematics from Vanderbilt, and of course an EMBA from goizueta. And we had a great conversation just recently about her EMBA experience here, so she'll have some stories to tell us on that. She serves on the board of directors for Haverty Furniture Companies. She's an active member of the Atlanta community, having previously served as the chair of the Board of Junior Achievement of Georgia, and currently serving on the boards of Children's Healthcare of Atlanta and the Atlanta History Center. She's also a member of the Board of Trustees here at Emory University, which has been fairly high workload, as I understand it. And so we're very happy to have Allison here today. So please welcome Allison. So I'm gonna spend maybe half an hour or so going through some questions, and then I'm going to open it up to the audience because we always get some great questions that way. So Allison, let me just start with you have sort of had an incredible career moving through first SunTrust and now to Invesco into a CFO role. As a statistician myself, I want to applaud you on doing a bachelor's in mathematics. It's not as sexy as statistics, but it's a pretty good qualification. Yeah, it's a good second best. But do you find that your sort of the quantitative training that you had mixed in with now your business training, does that bring a different skill set that maybe some of your other colleagues don't have depending on their particular qualifications?
So I will say I've been out of college. My math degree is about 30 years old at this point, which I feel that with
It's okay, math hasn't changed that much.
Well, I don't know. Raising kids, I feel like it changed a little bit, or I changed, it changed. I'm not sure which, but I have 2 high school kids, and I look at it and I'm like, I promise I had a math degree. I know I once knew how to do this. So I would say what my math degree did for me was it taught me how to think. It taught me how to analyze problems. It just taught me how to come at problems in a structured way. And so I don't do a lot of Pythagorean's theorem in my job today.
No, you do that for fun in the evenings.
I do, exactly. Yeah, you're right. Don't tell anyone. But it did teach me how to think, and I thought that was probably one of the more beneficial elements of the degree coming out of undergraduate, of just coming into, you just kind of methodically take a challenge and work through it, and you don't have to bite it all off at once. You can kind of step your way through it. And I think there's value in that. It is still an underappreciated degree, so thank you for appreciating it. But I do think it's a great degree for business in general, and it served me well. I was, honestly, life was a little bit easier back then. It wasn't that I didn't really know what I was going to do with a math degree. I just enjoyed math, and it was a little bit of the path of least resistance, and I knew I wanted to go into business, and everybody told me that'd actually be an interesting degree because back then there weren't that many women that had math degrees either. That alone made me a little bit unique, and that ended up being a benefit too.
So tell me, how after you graduated, how did we talked a little bit about how much work it is for students these days getting good jobs and things at the end, and how you have to prepare earlier on. So tell me a little bit about how did you end up with SunTrust, and what was the trajectory there?
Yes, I have a lot of empathy for all of you, and just as we are bringing in recent graduates too, you guys have to think about what you want to do a lot earlier than we did 30 years ago. It requires a lot more maturity and a lot more work to really get outside of your school and see what's out there, and that's not an easy thing to do. I think it's actually really difficult to really understand the job landscape and the environment and all the opportunities that are out there, because you have visibility we didn't have this nifty internet thing, but you still really don't know what all's out there until you get out there, and there's a lot of pressure put on you early. For me, I really wanted to, I actually was kind of between consulting and banking, if I think about it, way back in the old Anderson consulting days, and trying to decide which one would be the most sort of interesting path into business. And I was much more just business minded than I was pure finance minded. And I loved the idea of a training program, and it was just the traditional banking training program. So I was credit trained right out, and I still think that too is an underappreciated skill. And a lot of the banks are kind of making sure they're bringing that back too, because that ability to really underwrite credit and think about that from a capital structure standpoint, if banking, finance, investment banking is your path, it's a really important skill, because it's a bit of a generalist. Think of it as the 101 skill that can launch you in any direction inside of investment banking. So that was what drew me to it, was really that old credit training program. And I'm a native of Atlanta. I was at Vanderbilt, as you heard, and there were a lot of reasons why I wanted to get back to Atlanta, and SunTrust was the biggest bank in the South back then, and it was a great program and did open up a 20-plus year career for me with a ton of different opportunities.
Fantastic. So I could tell from the conversation we had earlier that you still have a lot of passion for the job that you do, and what gets you up each morning, and what brings the excitement after so many years working in the industry and all the changes that have happened? What do you find exciting day to day?
Yeah, there is a real difference. I'll get to your question. I would say there's a difference in being the CFO of an organization than what I did for many jobs before becoming CFO. So I was CFO at SunTrust for 2 years before we made the decision to merge with BB&T, which moved the bank to North Carolina. And again, I made the decision once again to stay in Atlanta, lots of family here. And that opened up a lot of different opportunities for me. I took some time before deciding what to do next. But the step to being a CFO of another public financial services company was a pretty natural one. But never before that did I ever think I would be CFO. My roles that you went through were much more outward-facing, client-facing. I started out on the investment banking side. I was working with clients day to day. I was then managing lines of business that were also serving clients. So I always was focused on revenue generation, running the business, and really thinking about our clients. I wasn't really ever focused on running my company, and that was a big leap. If you'd asked me 6 or 7 years ago, would I still be in a CFO role today, I would have said, no, I'll do it for a couple of years and I'm going to move on. So what gets me up every day and gets me excited about it? I actually find it incredibly challenging and a lot of fun, and especially in a big global business that is very cyclical, lots of complexity to it and all the different sort of markets. I'm further away from the clients. I miss that. I miss the clients a lot. But I love the business. I always think of it as it's a plane, and you're trying to fly the plane at the right altitude in very turbulent environments. And my job is to sit there and really think about how do we make sure we're keeping the plane at the right altitude in any weather pattern. And that to me is fun. The people are fun. I would never enjoy doing it if I was just in an office all day. I love the people. I love the teams. And then I love investors. I really thrive on the public company thing, which is weird because there are lots of reasons to hate being a public company. But I miss clients, but I get that same sort of fulfillment with shareholders. And so like I'll be at a couple of conferences next week, meeting with investors and speaking on podiums, and I get a lot of opinions around how we could manage our company differently or how they might like capital return to them in different ways. But I find it really interesting to take that in and kind of put it back in, come back into the office with my team and think about, I don't know, maybe there are some good ideas in this. There are challenging perspectives that help us think about how do we do what we do better and serve our shareholders better, not just our clients.
Right. And you went even further up in my esteem when you told me that you took time off to spend 3 or 4 months in New Zealand between before
jobs.
starting at Invesco. So,
Did.
Amazing. So what about challenges and opportunities you currently see at Invesco? We talked about this a little bit, but what are your thoughts on the biggest challenges and opportunities for Invesco right now?
Lots of opportunities. It's a really fun business. So maybe just to put a little bit of a dimension around Invesco and what we do, who we are, because we are a bit of an intermediary. We're not a consumer direct to investor. You can't just come on the platform like a Schwab or a Fidelity. Those are our clients. So we manage about $1.8 trillion in assets under management around the globe. About 70% of our business is in North America. About 10 or 15% is in Europe, and about 15% is in Asia Pacific. So primarily China, also Japan and India, the greater China area. What does all that mean? That is really, we create the mutual funds and the ETFs and the private market vehicles that people invest in every day. So about 2/3 of our clients are what we would call retail clients. So they're wealth managers. It's the Fidelities, it's the Schwabs, Merrill Lynch, Morgan Stanley, wherever it is, Edward Jones, LPL, wherever it is you might have assets invested. The other third or so of our clients are institutional clients. So think big foundations and endowments, university endowments, sovereign wealth funds, large pension plans. You don't find as many of those in North America, but you still find them in Europe. Those would be our institutional clients. So we're really creating the investment vehicles across equities, fixed income, money markets, private real estate, private credit, all those different asset classes, and really positioning that on both retail and institutional platforms. So from an opportunities perspective, we are a market-driven business. And so I am watching markets all day, every day, not just the markets in the US, but everywhere. And as markets are going up, we are making more money. As markets are going down, even if we're selling more, we're losing. And so there is tremendous opportunity when you just think about the volatility and the global connectivity of the world from a capital markets perspective and just wealth creation. So our opportunity is always in wealth creation. And where there is wealth creation happening, whether it's here in the United States or in India or in China, our ability to gain market share and participate in that wealth creation by capturing those assets when they're in motion, that's the fun. That's the real opportunity for us. Underneath that, there are challenges. In particular, the secular trends around the shift from active asset management to passive asset management. So those shifts from the mutual fund vehicle to more of that ETF vehicle that is more passive index tracking. Some of this is like, you know exactly what I'm talking about. Some of you are kind of probably wondering what I'm talking about, but that's the real, that's the threat in a lot of ways. We have a huge passive business, and we're fortunate in that. We're the 4th largest ETF manufacturer in the world, but we're a distant 4th. The big 3 do a little bit different than we do, and so we're gaining market share all the time, but we're small. We're about 5% of the market. The big 3 are State Street, Vanguard, BlackRock. They'd be about 60-70% of the market. They really dominate that space. So that part of our business is growing rapidly, but there is less and less investor demand for just a fundamental equity mutual fund these days, and it's really a pricing dynamic. So that's one of the challenges, and from my perspective in managing the revenue environment, and then how do you manage the cost structure against that, as you're seeing investors really shift their demand from one vehicle to another, there's a cost of manufacturing, if you want to think about it that way, that's still stuck in a vehicle that's not as in demand, but you can't really unlock that. And so you've got to really create efficiency in terms of how you manage that marginal profitability. And then the other just fun opportunities are, volatility is good, and everybody will kind of get into what about this market and that market. It's like, yeah, they're all good, and it's not a zero-sum game. The markets are going up, and even as we're trading, particularly in a very volatile global world right now from a trade perspective, it creates lots of opportunities for there to be money in motion, because wherever there's volatility or dislocation, somebody's going to come in with an idea, and that's going to create that space to come in and really capitalize on how do you create an investment vehicle and a thesis around that where people want to invest.
It feels a little bit like, that changing business environment is a little bit like, it has similarities to the business school environment where things are changing a lot as well, and which our products being degree programs and things like that are the most successful. And for me, one of the challenges since I started at Goizueta has been trying to negotiate that transition from the overall market still being very strong, but there's sort of transition from some programs are going to do better, some worse, and university is not a very nimble operation to transition in that environment. How do you feel Invesco is in terms of being able to transition and adapt to that changing environment, would you say?
It can be hard, and I would say one of the things that probably makes our business and your business somewhat similar is it's all dependent on people, and people are hard to change. Machines are easy to change. People are hard to change, and we all are, behaviorally, it can be challenging to get people to think differently and to really recognize some of the threats to what they do, especially when you've been enormously successful doing what you've done for decades. Sometimes there can be this existential kind of threat that's out there, but people are slow to really recognize how much it impacts them and how much they need to change. So I find that to be one of the biggest challenges. Also, it makes it kind of fun. Working with people is fun. It's also incredibly challenging day to day. But I think for us, it's a little bit of, there's some technology component to it also that's always hard to, it is hard to just go in and say, let's modernize this, let's renovate the house. It comes at an enormous cost, particularly, again, as a public company. You're always loath to do everything you need to do at the same time, because investors don't give you a lot of grace for just kitchen sinking a quarter saying we're going to really, overhaul everything right now. So you kick the can, you spread things out, you create this tech debt that's really challenging. It frustrates people, and your systems they're outdated the minute you put them in. It's getting better with moving data into the cloud, but it's still a big challenge. I'm sure we will get there on AI, of like, how will AI fix all of this? And it will somehow. It's just not yet.
Okay, well, let's talk about AI. So, since you opened that can of worms.
Yes, it's a can of worms.
Of course, I chose statistics because it was so sexy, and when data science became even more sexy, I became a data scientist, and now I don't even know what you call it, an AI-er. So, we've been trying to get a handle on that from an educational perspective, and, what should we be teaching our students, and a lot of it becomes sort of a shared educational model, in the sense that our faculty are used to being the experts in the area, but with some of these modern technologies, you can't spend 5 years doing a PhD on AI.
Right.
So for many of the classes, the students are sort of working at the same time as the faculty, and it's a more collaborative relationship. But tell me what sort of impacts you've noticed so far from AI specifically, but maybe other technological changes recently, and do you have a sense of where things might head in the future? Because if you do, let me know, because I don't really know.
I'm not a technologist, I will say that. And I think that's the real challenge. Again, back to how fast do you change a business and how do you change people? I think it's really hard to keep up. And it's really hard for whatever it is somebody does that you pay them to do. If we pay somebody to create alpha by being a fund manager, but we're asking them, and they're watching all the markets, but at the same time, we need you to really keep up with everything that's happening with AI and be an expert there, and that changes every day. It's really difficult. And of course, the older we get, the more the more reluctant we are to change. So how to figure out how to bring that technology in when you are a human-driven business, and yet you know this creates these efficiencies and productivity enhancements that we all benefit from no matter what your job is in a company. And of course it takes in any given company, there are hundreds if not thousands of different types of jobs, and AI is going to impact every single one of them. And I don't think we've ever really had a technology that has that kind of impact where you can look at just about everybody in the firm, shy of maybe like the maintenance folks, that are truly doing physical building maintenance. I mean, it's almost hard to isolate the jobs that aren't impacted these days. I think we're finding there's just the basic stuff. I mean, you guys are all using it, and all your ChatGPT and Copilot and anything you're using. We're all figuring out how. I mean, I did all my performance reviews for my team using Copilot. Now, I don't just put it in and copy and paste and say, here you go, this is your performance review. But it was fun for me, the first time I'd ever done it, to just start with that. It probably reduced the amount of time I put into writing those performance reviews. It cut it in half, if not even more than that. Did a great job. I was really impressed. I was like, look, this is what Copilot says about you.
I agree with you.
It's something as simple as that. Those types of tasks that we all have, it doesn't matter, again, your role in the company, we're all going to be doing performance reviews because that's a part of good leadership and good management, but where you can use just a little efficiency tool like that. But then you get into, and we, our compliance and our risk folks are all over it, and our legal folks. What did we tell it? What did we prompt? What kind of data did we feed it? How do we keep it in our firewalls? So the ethical elements of it, the kind of the legal and compliance elements of it, I feel like we take 2 steps forward, 1.5 steps back, because it's moving so fast. If you're not careful, it can get away from you. I think it's still trying to figure out. I mean, look, I don't think AI replaces a fund manager yet. It still struggles a bit with some of the outcomes there, but it's a yet. This is moving so quickly. We have to rethink how we bring people in. I actually think a lot of our early career talent is better suited than some of our later career talent, because you are all coming into the workforce with skills and comfort around how to just use basic prompting that those that are further along are like, what does prompting mean? And how would I actually, what question do I ask it? I don't have any answers. Of course, we're all grappling with this, and it's what's moving markets every day too. You say, there was a thing about 4 or 5 quarters ago. The more you said AI in your earnings call, you could kind of track how your stock went up that day. It was crazy. Didn't mean you had to use it, you just had to say it. So I think we're getting past that. It's not just the shiny penny that if you say it, it means your business is going to take off. It's a lot harder than that. It's unbelievable what it can do, but I'm not sure we know how to use it yet.
Yep. And to your point on the challenge of the human component to it, one of the challenges I've felt is sort of persuading people to treat it as a positive rather than a negative. There's a certain amount of fear associated that it's going to take away my job and things like that. And the more that it can be pushed as a positive, that the more skills you get in that, the safer your job is, as opposed to the other way around is a challenge for sure.
Well, and one of the things I will say to our company all the time we're in constant expense management, as most companies are, especially when you're contending with a challenging revenue dynamic, which we are with some of these secular shifts in demand. We have about 8,500 people. I don't look at AI and think, we could do this with 6,000 people. I think we manage $1.8 trillion today. I think we could probably manage $3 or $4 trillion with still 8,500 people because of AI. Now, does that limit new job creation? Probably. And so without question, the skills that are going to be necessary to be successful in any job will continue to evolve. But it does create efficiencies. It doesn't necessarily eliminate jobs, but I do think it threatens some new job creation down the road. And I'm thinking more sort of when we look back 10 years, 15 years from now, I think that's something we will see.
So I would suggest that maybe the new job creation, it's limiting is the less interesting jobs, and
I
that,
would agree with that.
that these new technologies in the long run make it better for everyone.
Completely agree.
But that's, yeah. So moving back to the human component for a moment. So a lot of what we've talked about is the challenges of dealing with humans and employees and such like. Can you describe what your leadership skills, the type of leadership that you try to exhibit, and was that developed sort of informally on the job? Was it part of your amazing EMBA experience through Goizueta? How much was it, where did you pick up the skills, and how would you describe your approach you tried to take?
Sure, and I don't want to leave anyone with the impression that working with people is challenging. I mean, again, that's the fun part. And so I would say my leadership style is very collaborative in nature. I love our executive team. We have a very collaborative executive team. So our CEO and the 8 of us that work for him are, we're all over the globe, and most of us are in Atlanta, but not all. We're also in Hong Kong and the UK, and we are on calls together. So we start our mornings today. We're on a Teams call all together for about 2 or 3 hours, 2 mornings a week. We spend about 3 hours together on a Teams call. And thankfully, we have great technology where everybody's sort of videoed in and you feel like you're in the same room, sort of, all together. It's tough with time zones. It's always somebody's night. I love the way we look. We think of it, pick your sport. I have teenage boys that play a lot of sports, so I'm always in a football stadium a lot. They both play football. So I always think of great leadership teams like a football team. And everybody's got a position on the field, and we've got to play your position. You got to play it really well. And you got to play it as a team, and that is no one player on a football team wins the day. And I think of then my finance leadership team in very much a similar fashion. I look at them as I want the best people. I want to hire the best people for whatever that area of expertise is, investor relations or procurement or my chief accounting officer, FP&A, corporate finance. I want the best. I want people that are so much smarter than me. Who are going to go out and really rethink the way we do things and want to play on a team. It doesn't work to me if anyone is not really a team player, because so much about the finance function is a team sport, so much about the executive leadership team of any company is a team sport. My leadership style definitely, it changed over the years. Starting out as an investment banker, I would say you don't see a lot of great examples of leadership sometimes in investment banking. Just spoiler also for those of you that might be going there. It can be, you know what you're accountable for every day. You know what your job is every year, and it is make a ton of money for the firm. And so it's really about how good are you in that deal sort of mindset. And leadership often gets promoted because they're the most successful and how they've done in sales and revenue generation for the firm. That doesn't always make for great managers and great leadership. And I was fortunate that I did work with some good leaders in investment banking, but as I was kind of coming up in the first 10 or so years of my career, I felt like there's got to be more to running a firm than this. Like, there's got to be more than, hey, you made $100 million for us last year, we need you to make $120 million this year. Like, okay. Any other ideas? Like, it's just sort of like, that's it. That's the only sort of leadership you would get. And that was a lot of what led me here to get my MBA was I didn't want to go to a full-time program because I would be giving up a lot of income generation at a critical time, kind of 10 years into my career. But I did feel like I was missing some of the softer skills around strategy and org design and just general sort of leadership principles. And so I was just really intellectually curious more than anything. And so I ended up doing the weekend MBA program. I see some of my old professors here, which is super fun. It's really impactful in my own career. So it was eye-opening, and it really did have a big impact, I would say, on just what I chose to do after that. It wasn't like I got an MBA and came in and they said, oh, great, here's your promotion. It wasn't that. It was more of how I started to engage and what I became more interested in and how I showed up and started to pursue my career from there. because I was exposed to different styles of leadership, different models of leadership, both from just an academic perspective and what we would actually learn in the classroom, but also through my fellow classmates who were all employed too. And that was the fun thing about the executive program, was really getting to spend time with executives from companies all over Atlanta, Georgia, and some broader than that, and really learning from them. And it was truly valuable, invaluable in a lot of ways as I think about just how my leadership style evolved. Servant leadership was something I didn't even know what that meant, and started to really understand what that looked like and how it could be put in practice. You don't see a lot of servant leadership in investment banking either.
Just to be clear, I did check with Allison that she had a good experience before I raised the Executive MBA here, so not totally naive question. But you also mentioned a fantastic experience you had while you were here. Do you want to tell people that story?
Yes, and I'm looking at Professor Kazanchin and Rosenzweig, and I think they've probably heard the story a few times. But one of the interesting opportunities I had, we were talking about kind of network, and did I come out of business school with a network? And I did, a great network. We're scattered kind of far and wide now, but some of us still keep in touch quite a bit. But one of the interesting opportunities I had was one of my classmates worked at Chick-fil-A at the time. He's actually still there. Chick-fil-A over 20 years ago it was big then, but it was nothing like it is today. And in the team we had for that particular semester, the 5 of us, he looked at our team and said, would you be interested in, not as a team project, it really wasn't a school project, but would you be interested in taking a week off of work and shadowing Dan Cathy for the week and being his apprentice? And we all 4, in addition, he was the 5th, we all 4 said, absolutely. One of us worked at Coke, I was at SunTrust, one was at Home Depot, one was at Equifax. So we were kind of like Atlanta's companies. It was really this great kind of mix. And so the only thing we had to do was get a week off from work and then show up at the hangar at 6 o'clock in the morning on a Monday morning and have a suitcase, and you'll be back at 6 o'clock on Friday night. And Dan was incredible, and I didn't know him at the time. He is a dear friend now, and it was this amazing opportunity to just literally carry Dan's bags for a week and watch servant leadership in action. And if you don't know, when they open a new Chick-fil-A store, if you're the first 100 people to line up at 6 a.m. the day of opening, you get free Chick-fil-A for a year. I think they're all pretty opened in Atlanta, so you're going to have to go somewhere else to kind of find that. But we were all over the country, and so back then, Dan would go camp out the night before, and he had a tent, and he had done hundreds of these camp outs. So whenever a new store opened, he showed up the night before, and there's this big camp out, as you know, the CEO's there, and 300 people would be out there, and there's a fun run at 11 o'clock at night, and the nugget party, and the whatever, and then we're banging on pots and pans at 5 in the morning. So we camped every night that week in a different Chick-fil-A parking lot around the country, and Dan had this big tent, and the 4 men that were my classmates slept in the tent with him. I was the one woman who would sleep in the playground inside the Chick-fil-A store. In a sleeping bag on the floor, and we'd brush our teeth in the bathroom, and then, every morning, I think we slept 4 hours a night. But we'd welcome everybody in and do this big kind of rah-rah thing, and it was such a fun thing for the new store operators to have headquarters show up. But then we'd go to a motel, we'd take a shower, and then we'd go fly to a different store, the one that was already open. And we'd go in, and Dan would do a workshop with them on service and what does great service look like, and second mile leadership, which was their kind of service philosophy. But what I observed when we would go into a Chick-fil-A and it'd be filled with patrons is Dan would come in, and before talking to anyone who worked there, he would go to each table and say, may I refresh your lemonade? May I clear your trash? May I get you anything else? And he would talk to every single patron, and he would take their trash to the trash can. He'd go bring them more lemonade. This is the CEO. And then he would go and talk to the cashiers. And a lot of times these are teenagers working the cash register. And then he'd go in the back of the kitchen and talk to everybody squeezing lemons and cooking the chicken. And the last person he would speak to, and we would have been there for an hour and a half, would be the store operator. This most senior person was the last person. And he would look at me several times, and I was just standing there kind of watching, because here I am, this investment banker where the hierarchy was very, and you kind of stayed out of the way. And he would say, Allison, clean up. Start clearing out trash, go get to work. And I was like, okay, got it. And so I'm like, can I refresh your lemonade? And I mean, then I kind of had it down by the end of the week of, this is how he operates. And it was truly transformational for me in my own leadership. And I adore Dan and tell the story if he's sitting right here. I mean, he's just been a great mentor. But now if I'm with him walking through a stadium or at a Braves game, I'll watch him walking through Truist Park. And it's not his stadium. He's picking up trash. You're leaving, he is picking up trash. Just every little piece he sees he bends over 150 times trying to get from his chair to the exit because he's throwing away trash. He is a great servant leader, and for me, it was just I would say a transformational opportunity with my colleagues, with my classmates at the time, to really see this is why this business is so successful. It's not just great chicken, it's great food. It's the way they make you feel. It's the culture. And the culture that the employees feel is the culture that the customers feel. And that kind of brought all things to life of what I was learning in the classroom, from strategy to org design to different styles of leadership. And it all, the finance stuff, interesting. But it's really, how are you going to make people feel? The people who work for you, the people who come do business with you.
It's a fantastic story. So I'm just going to ask two more questions and then open up for the audience. But the first one is, we have obviously a lot of Goizueta students here. There'll be some of them will be graduating in May. Any advice that you want to give a young person graduating today based on your experiences?
It's a marathon, not a sprint. So play the long game. I think everybody comes in sort of eager for, as you should be, okay, I did this, what's next? I did this, what's next? Play the long game and think about the story I just told and show up and figure out what can you do to make somebody else's job easier. If I have a lot of positive things to say about investment banking and just finance in general, but I'd say one of the most positive things about growing up in that investment banking culture, which was that 80, 90-hour a week kind of grind of a culture for years and years, is the path to success was to be the last person to leave. And you don't leave until you've walked around and asked anybody who's still there, if it's 1 o'clock in the morning, it doesn't matter, is there anything I can do to help you? Especially everybody that's more senior than you. I think that's missing these days. I watch a lot of young people run out the door at 4 o'clock in the afternoon, and it's like, what? I'm still here. What are you doing? Why would you not want to go door to door and say, what else can I do to help you? Is there anything I can take off your plate? Because you never, honestly, half the time somebody's going to say thank you, but no thanks, and you're going to end up being going. It's fine. But sometimes you're going to get something out of the blue of, you know what, you've asked me 3 times, and maybe try this. Would you help me with that? And it's going to be the project, the opportunity, the interaction that unlocks that next door for you. So just be available. Don't wait for people to come find you. Go door to door and ask, can I help you? Is there anything I can do? Maybe it feels uncomfortable, but just get over that. I really think that is the best advice for people coming out of school. And show up and be present. I don't care if it's a hybrid work environment. Show up. If you want people to know you work there, if you want people to remember you work there, be there and work with other people. The value is working together. It is not being behind a screen. It's great we have flexible environments these days, but don't take advantage of it. You're going to learn more from the more senior people you work with than anything you're going to learn behind a screen. So show up.
Good advice, thank you. And so last question, if you were to go back and talk to your 22-year-old self, is there any advice that you would give yourself? And the second part, would you listen to yourself giving you advice? Because I've got a lot of advice I'd give myself, but I wouldn't have listened to it when I was 22.
No,
yeah.
I've got an almost 22-year-old who, it's amazing how much less intelligent you become with teenagers. So I know I wouldn't have listened to myself because I watch him not listen. What would I give my 22-year-old self advice? Maybe a little bit of the same advice I just gave you, candidly. And I think I must have gotten that advice because that was a little bit more of like the way, it wasn't such an unusual thing. I think it is a bit more unusual now. It is a journey.
Anything you would have changed in retrospect?
Take chances. It's going to be okay to take a chance or two. You can make a change. You can change your mind. Don't change your mind too often. But yeah, I think a little courage probably, that it's okay to change your mind on a few things. And so you could try something. If you don't love it, try something else. I was fortunate in that I was pushed to do a lot of new things. Every 18 months, it was like, we want you to do this. What I see a lot of folks do is they're afraid. They're like, oh, if I try that, maybe I'm going to regret moving out of this position. And there's usually a path back, but you're not going to want to take the path anyways. So know that the path is back. Don't be afraid to try something new. I guess I would say I really didn't get that courage until I was probably more into my 30s. And so my 22-year-old self, I would have said, stick with it for a couple of years, because you gotta do something for a couple of years. Like, you're really still, you're really not making a firm money for the first couple of years. Like, they're still investing in you. So definitely recognize that. But then after a couple of years, where there's an opportunity to do something else, take a chance on yourself. It's okay. And you'll have hits, you'll have misses. If you're having more misses than hits, then maybe slow down. But it's okay to make a change every few years.
Yeah. I mean, in my personal experience, the most rewarding things have been where I've deliberately done something out of the comfort zone.
Yes.
And I think as you get older, it gets easier to have a little confidence in yourself. Sometimes I think you forget how hard it is when you're 22 to have that level of confidence because you haven't done anything.
No.
So
you don't have a basis for a lot of confidence yet. I mean, and that's okay. It's understandable. But a couple of years, you're going to feel like a couple of years of working anywhere, you'll be shocked how much more you know and how confident you feel in your knowledge.
Okay, so let me open it up now. Let's start here, and I'm going to look around the room so I don't miss people. But go ahead.
Allison, thank you for coming back to campus. My name is Kazi Huck. I'm a second-year MBA here in the full-time program. My questions are on leadership and time management. As you mentioned, our careers are a marathon, and through this marathon, we'll wear multiple hats, as you do with your CFO role on the board of corporation, servant leadership on community-based organizations, helping Emory, Goizueta, and Emory broadly. How do you prioritize these different roles, and when do you push back, or how do you know you should push back?
Yes, it's a good question. And then I'll add in there family in addition to that too, because and everybody's got some life outside of their job, and that looks different for everybody, but it's a really important part of life, because that is that's the fun part. That's a lot of times the why behind everything else. And so I really prioritize showing up for my family, especially as my kids are only home for a couple more years. You start with who pays you. Truly, I mean, the number one is who pays you. And that's a really, I think people do get that a little bit backwards at times, and you got to really prioritize the one that pays for me and the shareholders I serve and the board that and CEO that I work for. That's the number one. So that doesn't mean they always come ahead of my family, but they come ahead of everything else. After that, listen, I have a really sort of, one might say, a bit overextended calendar. My assistant reminds me of that all the time, of you say yes too much and you need to say no more than you say yes. I find if you're really loving what you do, and I really enjoy all the different boards that I'm on and the ways in which I serve, because I learn from it. I get as much from it as I give. And so for me, I find I gain a lot from that actually makes me better at my job. So I don't do anything that isn't going to have that benefit right back to my job. So we were discussing earlier, I mean, one of the interesting aspects of serving on the Emory Board of Trustees isn't just the university system, it's the healthcare side. So you're seeing the business of healthcare and the business of education. And they're two really totally different revenue models. And I get to work with great CFOs and see how they do it. And at the Board of Children's Healthcare, and that's I get to work with a great management team there, and I look at how they operate. And all of those it's like being back in the classroom in some ways. And I learn something that I'm going to apply back to my own business. If I can't do that, then I have to really question, should I be spending time there? And then I really try hard, and I mean, my calendar looks pretty well spoken for almost for the rest of 25. I put everything on the calendar personal right up front. And I mean, that is in December, January, I'm building out the personal side of the calendar. I'm the one hounding the high school coaches of, I need the football schedule. Like, I needed this year's football schedule the day we got knocked out of the playoffs last year. I was like, okay, great. Now, when does the season start? Because I'm in the stadium. I don't miss a game, and I have lots of international travel, and I'm making sure that whatever it is, I'm going to get back from Tokyo in time to be at a Friday night football game, even if I'm propping my eyelids open. And so you have to decide what are your priorities, and then you build your life around that.
Absolutely. Thank you, Allison. I actually interned in your finance department. And my question is, I think Invesco is commonly known for its specialty product in ETFs, RSP.
Yes.
But my question is more so about how do we focus on the other areas that are maybe not as popular right now so that we make sure that they're not left behind?
Yeah, it's a good one. Yes, we are widely known for the QQQ because we burn up the television airwaves with that one, which is a whole different story around sort of the marketing structure that's behind that and the partnership with NASDAQ and the marketing that we're required to do for the QQQ. So we sell a lot besides the QQQ. You wouldn't know that from the commercials. And it's a great question. I would tell you the QQQ sort of runs itself, which is great. Not that you want to know sort of how we invest our own capital, but what we spend a lot of time on right now is private markets products. That is kind of the, we'll see if it pans out, but believed to be a bit of the next frontier for wealth management. If you look at anybody's portfolio today, they maybe only have about 1% of their portfolio allocated to private products. And the expectation is that allocation should be more around 10 to 15%. But it's very clunky to take something that's built for an institutional investor, not just private equity, think private real estate, private credit products. How do you take that and package it in a way you can get it on a wealth management platform to try to move allocations up to something that looks more like 3 to 5 to 7%? So that's what you're referring to, I think, of really where we invest a lot of our own time, but also capital in trying to create those products and be first to market. And that's hard right now, too, because it's a bit of a rush to get products into a place where they can be packaged on a wealth management platform, but be easy to invest in. And it's not going to be easy compared to you log onto a platform, I'll buy Apple, or I'll buy a mutual fund, I'll buy whatever. You can't just log in. You've got to be a qualified investor. It takes it up a notch. But that's really where I think markets will be going, at least in the United States. Maybe in Europe, still a little bit ways away in some of the Asian markets.
At the back. Can you speak up a little?
Yeah. Thanks for being here today. I was curious about, given your background as the CFO of SunTrust during the merger, I was just curious, how it affected you and, if there was any challenges or successes.
Yes, well, so being CFO in a merger means you're doing the merger. So,
were there any challenges in a merger of two organizations together?
Yes. There's nothing but challenge. So that merger between SunTrust and BB&T was the largest merger, so that was in 2018, when we announced it in 2019, largest merger since JP Morgan Bank One. So that was all the way back in 2001. It was the first merger that had been allowed, I think still maybe the last one, that had been allowed of two CCAR banks. And that was in a more sort of pro-consolidation regime under the first Trump administration. Then in the Biden administration, not as pro-consolidation, and so regulation changed quite a bit. Who knows, maybe we'll see a little bit more consolidation. So all that to put it into context of incredibly unique that it got done, and of that size and scale, it was a $66 billion merger. And so you hadn't seen anything like it 20 years before, and you haven't seen anything like it since. I don't know if you'll see anything like it again. It could take a long time. Putting that together was, yes, nothing short of very challenging. It was really the two CEOs, the two CFOs, our two general counsels, and that was about it. Head of M&A on both sides. So it was 4 of us on both sides working to structure first the price. And in any merger, especially in a merger of equals, it comes down to, are you equal enough from a price perspective that it makes economic sense for both shareholders? But then it's the social issues, and there are 3 big social issues in any M&A, and it's CEO succession, which is entirely based on age of CEOs. It's kind of crazy. Name of the company and location of headquarters. Those are your 3 social issues. And I can tell you there were a lot of attempted mergers before us where it fell apart because they couldn't agree on the last 2, name and headquarters. And so when you look at the United States, there are still about 5,000 banks in the United States, most overbanked country per capita of any country in the world. And yet the big kind of 3 are about 70-80% of the market share. So it's a really interesting sort of environment, one might say anti-competitive in a way, without more consolidation that would allow other banks to keep up with those big 3 that are really opening up all new accounts. So it's tricky, and yet it all kind of hinges on name and headquarters, which is always kind of crazy. You can take all these great classes on structuring and merger math and M&A, and at the end of the day, can you agree on a name and a city? It's really what it comes down to. And that's how Truist came to be. Couldn't agree on name or city. So went with neutral, new name. There was no name the day we announced it. We said, we'll come up with a new one. And a neutral city, Charlotte. They were headquartered in Winston-Salem. We were in Atlanta. Charlotte was in the middle. That's how it came to be. Kind of crazy.
I'm Eric. I'm a senior. Thank you for being here, and thank
Yes.
you for your Emory leadership. Awesome. I think there are a lot of undergrads in the room, and one of the biggest goizueta buzzwords is networking. And I think a lot of students, myself included at times, struggle with how to approach networking, how to find mentors, how to maintain a professional relationship with people who can really make a big impact as a mentor, especially as a student here. Do you have any advice in terms of networking, mentorship, or any stories to share? I know you shared the awesome Chick-fil-A story. Any advice or stories about how mentorship has impacted you and how you approached it out of college, out of MBA, and advice for all of us in that room?
It is hard. It is hard. So, and it isn't easy. You can't just walk up to someone and say, will you be my mentor, right? And I mean, I think networking and mentoring is all just sort of more formal words for friendships and relationships. And, if you can, I don't mean to imply it needs to be overly friendly, but just in the same way in which you have, as social beings have figured out how to have relationships, friendships, it is the same thing where you've got to actually figure out how do you talk to somebody, and there's got to be a mutually beneficial relationship usually. Now, in true mentoring, it's often not mutually beneficial, but people don't want to mentor someone they don't have some affinity for and that they don't just kind of like. So you are looking to put yourself out there and just have conversations and be curious about what other people do and learn what they do. And out of that, oftentimes you can spark a kind of natural relationship where it does become something of, I want to invest in you because I see something in you. And I don't have any great advice other than you do just have to be in the world, in the sort of networking does become, it's probably the easiest way to put it, of you got to put yourself out there. You've got to go engage in whatever opportunities you have to engage, social and professional. You will make contacts, and out of those contacts, your universe will slowly expand, and it will. It's hard work, though, in the beginning especially.
Okay, I think we've got time for one more question.
Hi, Braden, second or first year MBA. Would love to know, as your role, I know as a CFO, you do a lot of investor relations as well. How much of that, or how do you manage investor expectations versus what the CFO is trying to do with the business, the direction of the business, and make sure that you're keeping everyone in harmony?
Yes. Well, so it can be tricky, and you have an obligation. Obviously, you've got to report your financial results, but after that, they're looking for guidance. And of course, your stock trades on the expectation of what you're going to do in the future, not so much in what you just did in the past. And It is a balance to make sure you look at the forecast and really think about as best you can, and it's really impossible to know exactly what's going to happen, particularly in a business like ours, which is highly cyclical. If the market falls out, 500 basis points tomorrow and stays down, or 500 points and stays down, that could have a pretty material impact on our revenue over the next few months. So I can only guide with what I feel comfortable really committing to, and you try to give it real broad parameters. What I figured out about investor relations early on, people listen to earnings calls and they're always like, how do you do that? I mean, it's like a pop quiz, and how do you know all those answers? And why they keep it. We had an interesting earnings call last week, and I got asked the same question like 9 different times. And people are like, how did you answer that so many different times? They weren't quite figuring out how to feed their model. All they're looking for is, how do I feed my model? Like, just tell me the math. Just tell me what number to put in and I'll leave you alone. But what I figured out early on was it's all about relationships. It really is all about people. And so getting to know the analyst, there's not an analyst that gets on the call that asks me a question that I don't know, that I haven't traveled with, that I haven't done a non-deal roadshow with, that I don't know who their kids are and how old they are, and we haven't talked about baseball teams or gone to baseball games together. They're humans, and when you get to know them, they're rooting for you. They want you to succeed, so they're not trying to trip you up. They're actually trying to sometimes help you draw out the story. And so, like anything else in life, business is the same way. Relationships matter. Investing in people matters. People root for people they like. People want other people to win. If you give them time and respect for what they're trying to do, they'll give you that time and respect right back. But to get to your question, stakeholder management's hard, and shareholders are looking for a pop in stock right now. I don't really care what else you have to do, but we also have employees that we have to take care of. They like to get paid. We also have clients who are looking for value for what we do for them. And so I think of it as a 3-legged stool: clients, employees, and our shareholders. And if any one of those is shortchanged, then the stool kind of wobbles and tips over. You've got to take care of all 3 of them equally. And so you're making trade-offs in your decisions all the time.
Great. Well, that's a fantastic way to end our session. Thank you so much, Allison, for coming and talking to us.